Hello, everybody, and thank you for tuning in. Uh, Thank you, everyone, for following me on Twitter, YouTube. I like what I do, and I just appreciate your comments and your follows, subscriptions, and all that good stuff. So please keep doing that. Today, we're going to look through Twitter very quickly. What technical charts has people been applying for the past, I don't know, 4 days maybe? And yeah, let's just blast right through, so we don't take too much of your time. Here we have Jay Hinster says, URNM, here we go again. As you know, for the past few days, I have mentioned plenty of times that we are very close to a breakout. I need to see a weekly close above 35. Yesterday, I think we peaked above and retraced to 35. So URNM looking fantastic. Again, I will wait for the weekly close to say this is the breakout, but still, it's all looking good. Also, if you look at the miners, the URNJ broke out yesterday. So uranium looking absolutely fantastic. Here we have North Star. Stock markets priced in real things are breaking down again. Once again, inflation is not transitory. I completely agree. I just want to show you this, that this is the SPX priced in oil. It's a beautiful take from Kevin, and clearly the wedge is breaking down, meaning that energy, oil, again uranium is have a good chance of outperforming the overall index, the SP 500. A great chart here, and I think again this wedge is pointing to that we're going down into this zone. I completely agree. Will we go all the way down to the lower side? We have to wait and see. But still, this is a very bullish setup for energy, because this means that energy will rotate from the SPX into energy, the energy sector, oil, gas, uranium, and so on. So yeah, great chart by Kevin here. Grady. The big breakout level for silver using the yearly time frame is 31 roughly, and not anything else. That's not the lower time frame. The blue arrow tightening impulse pattern tells us a big breakout is close. Measured move is 800%, so 250. This is his yearly, and the reason why he says that this is the 31, you can see the highs from the yearly chart. Again, the big level to get through is around 30. I agree, but I do think on a weekly time frame, also there is a level at down here at what is it, 26. That to me confirms it, but the yearly confirmation, yes, is above the $31 level. A great chart, and as you know, I agree. Silver is going much higher. We are in a big inflation period. This decade is one big inflation, and silver will respond. And when it does, it will move a lot quicker than people can actually imagine if you look back in previous bull markets for silver. So until then, have patience. Yeah, looking absolutely fantastic. I agree. 250, in my view, might be on the low level on the target, but still. Yeah, this is Jerry Robinson, just a cup and handle, which is also a pattern that I use a lot. Just want to show you, last time we looked at the head and shoulders, or inverted head and shoulders, and this time we can have a quick peek at the cup and handle. Basically, what the cup and handle is you have you have a massive move up, and then you have a rounding pullback or rounding bottom like this. And typically what you also find is in here, in this zone right here, at the low of the cup, you often see an inverted head and shoulders. In most cases, you have it right here. You can see you have the neckline coming across, inverted head and shoulders. And then the confirmation of the rounding cup is typically when you break that neckline. So yeah, and then often when you get to the top again, the traders on the momentum traders are exiting because that's their target. Then you'll get a retrace. It could be a flag in this case. You can also have another handle like the cup. So you have a big rounding bottom and then a smaller one. And then you break to the upside and you buy the breakout. Typically what you want to see is that the handle, the pullback in the handle should not go below 1/3 of the height of the cup. That's a general rule, but still, yeah, it doesn't matter. But that's the ideal retrace for this cup or the handle. Excuse me. James Anderson, gold. Gold's first time reaction. First time U.S. debt was downgraded on August 5, 2011, and just he's pointing out here this was a downgrade which we just had like a week ago, 2 weeks ago, maybe, can't remember. I just look at the move from there. we went up 25% at that point. So could we be in for a similar thing with the first downgrade here? Maybe, but a downgrade is not good at all for such a big economy as the US. We have Simon here, great guy actually. He does, oh, excuse me, he does some great charting, and does some great charting, that's for sure. And yeah, gold weekly Bollinger Band, now flat squeezed. It cannot get more extreme. You can see the squeeze here, and we are in an uptrend. And again, I think gold will have its touch to the all-time highs, in Q3, Q4 this year. I completely agree with his take. You can also see here he's pointing to the Bollinger Band is getting way at the lower side of or the smallest you have seen in 3 years or so. So that's typically where you get the squeeze and you get a big move in either direction. And since we are in an overall uptrend, the probabilities is often that we go higher and not lower. So yeah, great chart by Simon there. Xavier Costa, just a quick here. I don't want to read it, but basically the US oil demand is at a 26 years high. And with where oil is, the SPR, I mean, I think again, energy oil is coming back to life here. We have had the big 50% retrace, and now we're bouncing off a big long-term support. Oil is going way higher, and I agree with Tavi on this one. Again, Jay Henster, the U.UN, you can clearly see that the uranium spot price, or in this case, the Sprott Physical Uranium Trust, is in favor of outperforming the SPX. Again, energies, for me, is again the place to be for the next year or two before the rotation comes in again. Looks fantastic. JC Paris here, stocks versus commodities into resistance. Could argue that this is one big long bearish channel all the way up. You can see it there, and that then we're rolling over. Again, we can roll down, then pierce to the upside, but still then. But this we have to confirm. So as long as we are below the trend line, commodities are in favor, and this could be a next leg down here. Fantastic. Similar again here, U.S. crude oil inventories is at what is like a 30-year low, more or less similar to the Tavi chart. The oil demand is at the all-time highs, more or less, and the reserves are at more or less the all-time lows. That's an explosive cocktail. Then we have set your stop here, Denison Mines. Again, look at the squeeze here. Again, I don't know exactly what all these indicators do. Some of them I do, but he has them on again, so I will not go into detail because I don't know exactly what they do. But again, uranium, one big squeeze for Denison Mines here, trying to peak out here, and also you can see an uptick in the volume, so that's a good start. Again, kind of aligned with the URNM, URNNJ, and URA, the big ETFs, looking that it wants to break out. Similar to all the miners. Some of them has broken out and now it's retesting, and some of the ones that hasn't broken out, like Baseload, Denison Mines, Energy Fuels, and so on, they're just waiting for the breakout, which could be very, very imminent. So I agree here with this guy that it looks fantastic, and it's only a matter of time, in my view, before they break out. Okay, that's all I had for you guys today. Again, comment below, what do you think about energy? Are we rotating into energy now away from the Nasdaq and the SP 500? I think we are. But yeah, have a great day, guys, and we will see you in the next one. Cheers.